Howdy there, folks. Welcome into today's video. 4 videos for me to react to, some short ones here today. Okay, first one is in regards to Jim Cramer and PayPal stock, which, my gosh, I've had so many people reach out recently about, Jim Cramer and his opinion on PayPal, and he's been speaking very negatively about PayPal recently, not being bullish on the company and things like that. And just 40 minutes ago, he spoke negatively about PayPal again. And so I thought finally, okay, let me react to this, kind of give my opinions and perspectives in regards to that one. Then I thought we'd react to this one as well, Mad Dash on Micron. This stock can be a leader. I want to share my perspectives and opinions on that one, hear what he has to say in regards to Micron. It's an interesting stock. Homebuilder sentiment goes negative for the first time in 7 months. Very, very important subject. I want to react to that one, hear what's going on there, a little 1-minute clip, and then last one up here is a longer one. Ed Yardini, we may have the immaculate disinflation. So that's kind of the long clip we'll react to. So appreciate everybody joining me as always. Thanks so much for being here, folks. New all-time high subscribers in the History Channel. I appreciate each and every one of you for being here as always. And let's get into this. By the way, if you have any opinions in regards to any of these videos and you want to share your perspective, share it down in the comments section.
Let's get to Jim and stop trading.
Yeah, there was a piece that came out by Lisa Ellis this morning. She's been on a lot from MoffettNathanson, which was a downgrade of PayPal. She had held on to it for a long time, and a lot of talk about, remember, you got a new CEO coming in 10 days. But I find that we're at this moment, Carl, where there's the revenge of MasterCard and Visa. That the the eFins, no, they're just not working, and you can stay away from every single one of them. What you want to be in is the old fins, and the old fins, MasterCard's doing incredibly well. Mike Beback doing a great job. So that moment where I thought that everything was going to go with the new guys, that ship has sailed.
Yeah.
All right, so clearly he doesn't like PayPal. He says, if anything, you need to be buying stocks like, Visa, MasterCard, some of the older companies in the space in general, right? In fintech, we can call it that. So what's my opinion on that part right there? I would say my opinion on that is when you look at companies like Visa and MasterCard, certainly great companies. I think the biggest risk to those companies over this next few years actually has nothing to do with PayPal or anything in fintech. I think the biggest risk to those stocks specifically, and I don't think anybody's really even thinking of this yet, it's the government. Those companies are starting to make so much money, and they're starting to become such huge, powerful entities that I think, if anything, the government could potentially, let's just call it, change some things or start putting pressure on them. There's many different avenues the government could go to basically just kind of put a new tax on those companies. Let's just call it that. So, or limit how much money they can make, something like that. Those companies are becoming massive now. And they just take these little charges in there, and I think it's a risk, and I don't think anybody's really thinking about it right now, but I think it could be something the government takes a harder look at in regards to that.
Alex begins in a few days, and they talk mostly about Apple Pay competition.
Well, yeah, Apple Pay, it's 10 years. I think Apple Pay is, they're very, very bullish about Apple Pay at Apple. Goldman, I don't know. I mean, David, you spoke with David Solomon last week.
To be fair, Apple's going to be bullish on everything at Apple. Like, like, what are we talking about here? That's like me saying, am I going to be bullish on a new stock I'm buying? Of course, yes.
I think they're getting hurt on Apple Pay, but what do I know? They don't break it out.
They don't. I mean, they would simply say...
Cost of business.
Right, cost of business. Consumer, obviously, such a small percentage of their overall revenues,
right.
And they're clearly not...
I don't know.
Leading into it any longer.
I mean, you could sell it. I'm sure somebody wants it.
You had high hopes for that card.
Yes, I did. And then there was a shuffle at Goldman. The person I was close to went to another firm, and it just seemed like it was leaderless. But yeah.
All right, so that pretty much covers PayPal. In relation to PayPal and Apple Pay, I mean, they've been competing with them for nearly a decade now. Apple Pay is nothing new, right? They're going to continue to have to compete with them. They're going to continue to have to compete with Cash App. They're going to have to continue to compete with Shop Pay and many others, more on the Braintree side. There's going to be a lot of competition, and there's not new. Like, competition has been in this industry for a long time. It's going to continue to be here. It's not going away. And you just have to, if you're a PayPal shareholder, you just have to feel comfortable with that. There's no way out of that. Like you just have to feel comfortable. Either you feel comfortable with the competition or you don't. But it's a very competitive space. It's going to continue to be, and that's just the way it is. So, as far as me as a shareholder and somebody that's been buying the stock heavily the past few months, I can deal with the competition. It is what it is. It's part of the process. Alrighty, let's hear about Cramer's opinion here on Micron.
Be surprised too, because he and I didn't talk about it during the break. So what are you going to do?
Okay, Micron. This is very important because there's a Deutsche Bank upgrade, and there are a number of positives. I think we've hit a lot of negatives this morning in a number of different situations and sectors.
Yep.
They're talking about finally the inventory glut is behind them. They also say that we are at the inflection point. They have something that's more proprietary than commodity. This stock can be a leader. And there are others that can go with it. I mean, for instance, historically, you might find that AMD will go with it because there's a big PC component. Now,
that is if Deutsche Bank is correct in their analysis.
If they're correct, exactly, and trying to predict the bottom so far has been a fool's game. Just a fool's game. But I've got to tell you, David, if it's true, this group is a leadership group, and it's been just kind of weak for weeks now. I mean, obviously, Intel would benefit from this.
Right.
I have not found anything other than NVIDIA that's been positive. And NVIDIA's been one-way street down since they reported that great number.
All right, before we go further here, something very important you got to understand about Micron stocks specifically. Okay, this is very important. When it comes to Micron, there's a company that goes through these insane bullish cycles and bearish cycles. It's very kind of like a cyclical company where sometimes it doesn't really control its own fate. It's really dependent upon how the semiconductor industry is doing at a given moment, right? No different than some companies are just so dependent upon the economy, like construction companies would come to that mindset, right? Oil and gas companies could even come to that mindset. But yeah, Micron's just a stock where it goes through these insane booms and insane busts and insane booms, and it's just very volatile stock. It can even have periods where it doesn't do anything, right? Now, the really good thing for Micron is this is a company that I can tell you is going to benefit massively from AI. Anything higher end chip related is great for Micron because Micron is a company that sells memory, right? And so anything more complicated that needs more memory is phenomenal for them. And there's only a few big players really in the memory chip market in general. So that's good for Micron, but it's always going to trade at very low PEs. You got to understand that. You might think, oh, I'm getting a great deal in this stock. Not really. And mainly because of the bust cycles this company has to go through when things are soft in the semi space.
Maybe Micron sparks a little life. It wouldn't surprise me.
We talked about the movement in NVIDIA directly after the report of the quarter. The stock market hasn't done particularly well since then either, has it?
No, and the stock market hasn't done that well. Look, there are individual stocks that have done well.
Right. Well, I can name 7 of them that outperformed the 31% gain in the NASDAQ.
Well, we have Amazon. It's been terrific. Alphabet. And by the way,
Meta,
I don't know. I mean, this is anecdotal.
NVIDIA.
How long? Oh, Tesla's amazing. How long will people ignore the fact?
NVIDIA's down to 427? What? Are you serious? Really? I am surprised. NVIDIA? Let's see what's going on with NVIDIA. If we can get I don't know why TradingView's been working so slow today. I don't know what's going on with TradingView today. Come on, TradingView. I don't know. Whatever. But wow, NVIDIA just continues to show weakness day after day after day. That's interesting.
That Alphabet, Google, has an incredible football package. And maybe brings in more people. I know when you talk about these things, you talk about the NFL, it's always anecdotal. But you did have that Monday Night Football, incredible football package. How long will people ignore the fact that Alphabet, Google, has an incredible football package? And maybe brings in more people. I know when you talk about these things, you talk about the NFL, it's always anecdotal. But you did have that Monday Night Football being the best. You do have a surprisingly good option in Alphabet, much better, I think, than DirecTV. You have gambling, I know from DraftKings, out of control positive in the fourth quarter. You actually have fourth quarter action that has shocked people, and it's almost like Vegas is involved. I know that's not true. But I just think that people are misjudging. I think Alphabet may be a real winner in this. And We cannot dismiss the NFL as a factor in our lives. The Monday Night Football was quizzical because obviously Jets, Bills, it's not like those are the Bills market, Buffalo, last I looked, not.
Okay, so what he just explained there, that's all super, super bullish for a company like Fubo that doesn't have any other businesses and is just focused on, that's like the most bullish thing for Fubo. When it comes to YouTube TV, let's not forget, YouTube TV is a super small component business of Google, okay? And YouTube's in a lot of trouble in several different fronts. I should make a dedicated video on what's actually going on with YouTube right now, but YouTube's in a lot more serious trouble than I think a lot of folks realize right now. And I'll have to do a really in-depth video either on the main channel or this channel at some point in time in relation to everything that's going on there, because I don't think a lot of people know what's really going on behind the scenes. But anyways, you know, the bottom line is Google's business is Google search in YouTube. Okay, YouTube TV is just a very small component of the whole situation. Even Google Cloud's more important than to Google than YouTube TV is. So, yeah, what he just explained there, that's super bullish for Fubo. If anything, he should probably look at Fubo stock, Cramer, because that's a much more direct beneficiary and doesn't have to deal with the baggage of other businesses that might be in a little bit of a tougher place. Homebuilder sentiment goes negative for the first time in 7 months. Let's get into that one.
For that, we'll go to Diana. Good morning, Diana.
Good morning, Carl. Homebuilder sentiment fell 5 points to 45 in September, according to the NAHB, now solidly in negative territory for the first time in 7 months. 50 is the line between positive and negative. That follows a 6-point drop in August. A year ago, sentiment was at 46. Now, builders are blaming high mortgage rates, which went over 7% at the end of June and just haven't budged. As a result, builders are going back to incentives. 32% said they cut prices in September. That's compared with 25% in August, and the largest share since December of last year. The average discount, 6%. Now, of the sentiment index's 3 components, current sales conditions fell 6 points to 51. Sales expectations in the next 6 months also fell 6 points to 49. Buyer traffic dropped 5 points to just 30. And now, despite the drop in sentiment, builders say they're still benefiting from a lean existing home supply. A special question was added to the survey this month about who's buying, and builders said 42% of their buyers were first-time buyers. That is much higher than the historical norm of about 27%. So again, it's all about rates, David.
Yeah, obviously interest rates, mortgage rates are hurting substantially in relation, right? But the low inventory is helping the home builders, obviously, to a great extent as well. And at the end of the day, it seems to me, in relation to the home building market, it seems like the lower end is doing still fairly good. It seems like it's in a stronger spot, I guess you can say, when it comes to lower end home builders, when it comes to cheaper homes in general. It seems like when you go, the higher you go in price, it seems like that's where you're seeing more and more weakness in the market. At least that's kind of what I'm seeing out there. So we'll see how it all trades out. But yeah, obviously mortgage rates being 7% plus is not going to be good overall. It's going to be a very bad thing. All right, last video to react to here. We may very well see the immaculate disinflation, says Ed Yarndini. And by the way, disinflation, if you don't know what that term means, because I think it is important everybody understands what that term means. And, you know, before everybody started talking about inflation, deflation, no one really knew what disinflation meant. Disinflation, basically what that means is the rate of increase of inflation is coming down and coming down and coming down, okay? So a lot of people think, it means deflation, okay? No, deflation would be literally like year-over-year CPI numbers being negative, okay? Meaning like prices are dropping. Disinflation means just the rate of increase is dropping, okay? So instead of a 5% CPI, you got a 3% CPI, something like that, okay? That's disinflation. All right, let's hear what Ed Yarndini has to say.
We go from a 4% real GDP growth in the third quarter, and that gets cut in half. We're headed to 2% for a variety of reasons.
Yeah, that does make sense to me. It looks as though we had some unusual factors pushing the third quarter numbers up. Particularly the strength of the consumer was quite impressive. Some of that was, of course, related to Taylor Swift concerts and very popular movies. But we are seeing some slowdown in consumer confidence. This increase in gasoline is unnerving to consumers. It's a price that everybody can see as they drive down the road, and seeing it going up again, I think, could weigh on consumer spending.
You got UAW strike. You got
I think you've got to throw that
possible shutdown. You got Europe in recession, China slowing down. There's just a lot of things. So you think the Fed's done? There'll be a pause, and then there won't even be any hike next time either.
I think Fed officials have been communicating that they're getting comfortable with the idea that the federal funds rate is restrictive enough that if they just leave it here for a while, it'll slow the economy down and it'll bring inflation down. And I agree with that. It makes sense. So I think when we see the dot plot, the summary of economic projections on Wednesday from the FOMC, I think it'll show that they aren't going to raise their federal funds rate forecast for this year beyond what they've already done during the last meeting. I think an increase in November is still possible, but that will be left in the dot plot. But I think the big change will be an increase in the Fed funds rate next year.
Well, the Fed's in a pickle. The Fed's in a huge pickle here in this situation. Because think about it from their end, right? One of the huge components of why CPI has gone higher recently, the main component, honestly, is gas prices, okay? Because oil's gone up. So you got to ask yourself, is the Fed willing to potentially crash the economy because they keep raising rates? And I mean, clearly look at the Homebuilder sentiment, right? Are they willing to crash the economy due to basically gas prices? And I think that's a fair question, right? They've already gone so far now at this point in time. It's clear the Fed lags are catching up and are going to catch up certainly in 2024, right? So you want to keep raising just because gas prices are high? That's a big question. And that's what you got to ask yourself, right? Are you willing to crash the economy and then have to do bailouts? Because let's be clear, if they crash the economy, you're going to have to do bailouts then. You're going to have to money print like crazy. You're going to have to do quantitative easing. It's going to be a mess, right? You got to clean up a huge mess all to fix that problem. And are you even going to fix that problem? If the Fed raises a quarter point, half point, whatever they keep raising, does that magically fix oil price? Then at that point in time, these are things you gotta wonder, right? And so I think they're in a real pickle right now.
An implied decline, but much less than maybe they were forecasting last time. Last time they were forecasting 100 basis point decline in the Fed funds rate. I think now they might go for more like a 50 basis point decline next year.
And this won't pull the rug out of the stock market. You still have 4,600 by the end of the year on the S&P. And then you think better next year. You think we could be new highs, I guess, 5,400 by the end of 2024.
I know that generally speaking, Fed watchers like to criticize the Fed and suggest that they're always wrong about their forecast and what they are doing. But I think they're actually getting it right this time. And I think we may very well have immaculate disinflation where inflation comes down without an economy-wide recession. We've had rolling recessions, but all in all, I think that's kind of the way things are shaping up.
I'm skeptical. I'm very skeptical if they're actually going to get this right. I'll be honest. Why should I have faith in them? You know what I mean? Like why should I? Given, obviously, the situation we've been put into, I don't know, man. We'll see. I'm very skeptical. I'll be completely honest. That's why I'm making sure I'm hedged for 24, because I'm skeptical.
And if so, I think earnings will continue to improve next year. I think this year I was expecting 4,600 by year end. We got there by July, and I looked around at all those issues you just raised and concluded that we'll probably just go sideways for a while, consolidate, as Mike said.
And these yields that we're going to be left with are basically where we were prior to the financial crisis.
Right.
So that you see that as almost a normalization, and so life goes on.
Yes, I do.
Not the end of the world.
That's right. Life, absolutely, life goes on. I think the new abnormal that we all lived through from the great financial crisis to the great virus crisis is now behind us, and I think we are normalizing. And before the great financial crisis, the TIPS yield was around 2% for the 10-year. The inflation premium was around 2.5%. So that gives you about 4.25%, 4.5% is kind of the right area for the bond.
Energy you love. It's still overweight energy, IT, even financials, and then materials.
Yeah, and again, I'm not looking at this as sort of a trader. I'm looking at it as where you want to overweight over the next 12 to 18 months. And I think as some of these short-term problems get resolved, the economic performance would be pretty good. I'm actually looking for productivity-led growth over the rest of the decade, and so I'm fundamentally bullish about the outlook for the economy and the stock market.
Well, maybe we've been through it. You mentioned it, and I was thinking, oh my God.
So, although I might not 100% agree with Ed Yardini here, at least his case around energy makes sense, right? He's bullish on energy, bullish on materials, okay? At least that makes sense. He's bullish on the economy, right? He's bullish for the remainder of this year. He's bullish for 24. And so at least that sets energy up for a good position, right? The people I don't understand and the people I don't like are the people that are bullish on energy and bearish on the economy and think we're going to crash and everything's bad and stagflation, all that, but yet they're bullish on energy. Doesn't make sense, man. Doesn't make sense. If you really think the economy is going to get hammered, I'm telling you, energy is going to get hammered as well. There's no situation where the economy doesn't crash and unemployment skyrockets and oil prices go up. Doesn't happen, okay? Doesn't happen. And so that's, his story at least makes sense. I don't necessarily agree with it, that the Fed might pull it off. We'll see. I'm skeptical.
All that really happened, financial crisis and the great pandemic. I mean, then a horrible war. Russia invades a fucking neighbor.
Here we are.
I mean, the only thing we haven't, the only thing that's left is like the zombie apocalypse.
Would you bite your tongue? Would you bite your tongue? Maybe not.
Oh, yeah. I heard about zombie apocalypse is coming because I guess something in The Simpsons, today's National Cheeseburger Day, my wife was telling me this, and she was saying in The Simpsons, like they put something in the burger so everybody turns into zombies. So I'm trying to figure out really if I want to eat the burger or not, because it might be better to just be the zombie than have to be scared of all the zombies out there. I mean, just, you got to think about this for a moment, right? It's like, what's the better option there?
Yeah, I mean, that's all that's left. And then all bets are off if there's a zombie.
Well, look, what's
I
left
think
is
you don't want to hold any assets in that.
Yeah, look, what's left as a risk is that I could be wrong. Inflation could make a comeback here, kind of sort of a Twin Peaks situation, in which case the bond yield will go up to 5.5%, and that would clobber the economy and the stock market.
Be glad they weren't working on Ebola. That's what I feel good about. At least leave that one. Please don't mess around with that.
No, so anyways, I appreciate you guys joining me for this one. Interesting thoughts on all those different videos. Let me know if you have any opinion and anything we just discussed in the comment section. I appreciate y'all joining me. Pin comment down there will be an application to fill out to join my private stock group if you're looking to join in there, learn everything I've learned up here in the past 15 years. Much love and have a great day.